Okay, so now I recorded the shout as well. So just don't have it inside your ear pods because it's going to blow your brains. So let's start. Whenever you guys hear balance sheet, it's like something shuts down in your brain. And I do not understand why, because you know what? The balance sheet is actually easier than the income statement. No. You don't believe me because you have told yourself the lie. Now let me explain to you why. Because most of the balance sheet is literally just transferring things. The first and most important thing is knowing the format. You guys have to know your format, and once you know the format, you're going to see how easy this is. So the format of the balance sheet, the first thing, it's divided into assets, equity and liabilities. Okay? Both the assets and the liabilities is divided into non-current and current. Non-current and current. Okay? Your fixed tangible assets. You have to remember then, this is your note 3. This is note 3, the carry value, the total carry value. And how do you get total carry value? Let's go back into our head into note 3. It will be the cost price, the start of the year, plus the addition, less the carry value of the asset disposal, less accumulated depreciation, less depreciation. Just remember that. Okay. Most of the times in grade 11, they will actually give it to you, or they will ask you to do the note. It's not like grade 10 where I'm going to, because now we've got asset disposal as well. Okay. Financial assets is my investments. In other words, you can write there, it's any investment. And you'll see that sometimes they don't give you an extra line to write fixed deposit here. Okay? So what you need to know is that you can go. Is it going? Okay, so what's also important when we say fixed deposit, we know this is my investment, right? And now sometimes they will only give it one line. So then you just say financial asset, double point, fixed deposit. Okay, so next current assets I know. Inventory, receivables, cash. Don't take time to write out long sentences. This is sharp. Okay? Equity and liabilities, owners, equity, and may I say, in partnership, that's the only thing that's going to change. It's going to be owners' equity, capital, current. CC, capital, current. Block and top. That's the only thing that changes. The rest is still the same. Non-current is going to be my loan. Current is my payables. Short-term loan, bank, overdraft. Okay. Now I take my trial balance. And what do I know about my trial balance? Oh, I am only going to use the balance sheet section because I'm doing what? The balance sheet. Okay? Now, what is important? If I look at this, how wonderful is this exercise because they give me debit and credit. So the credit side in the B accounts, I know it's my owner's equity and what else? My liabilities. The debit side is my assets. Easy as that. Okay? Now, can you see it's a post-closing trial balance, meaning that 630 is already the owner's equity. Because what do I do post-closing? I close off drawings to capital. I close off profit and loss, which is what? Oh yes, it's my net profit to capital. And then I balance. So it means I've already said capital less drawings plus profit. I've already done it. Okay. So what am I going to do? I'm going to put it here in owner's equity. Now, why on earth do I not put it in the final column? It's because I do not know if there's maybe an adjustment that I didn't take into consideration. Right. So now I go on. Land and buildings, vehicles, equipment. Can you see all of these things? Nee? Because it's post-closing, it means that accumulated is already the opening plus this year's depreciation. It's already done because it's post-closing. Okay? So I would go and I would say this plus minus minus. And you can go test it and it should give you that answer there. Right. Now, trading stock. So what is trading stock? Now they're testing if you know the categories. Can you see? Basically, recording is putting stuff in categories. You're just sorting. So let's sort. Where does trading stock go? Trading stock goes to inventory, 72,400. Debtors control goes to receivables, 14,800. You all can see where I get the amounts. I'm not going to do this the whole time. You just follow with me here. Okay. Bank, can you see it's on the debit side? So it's cash. Where would I put it if it was on the credit side? Bank overdraft. Now I want you to listen to what I'm saying. Bank is either cash or overdraft. Can't be both. And you're never going to say here, if it's an overdraft, going to say it's a minus. And it can move between the two. Let's say, for instance, I give you adjustment now where I say, oh, I bought a vehicle for 70,000 cash. I recorded the vehicle, but I forgot to record the bank. Can you see there you're going to need to subtract 70,000, which makes bank now an overdraft because it's a minus. Can you see how it jumps? Okay, so let's go on. Next I see petty cash. That's definitely a cash. I see cash float. That's also a cash. Then I see creditors. Can you see now I go to the credit side, so it's a liability. So I go to liabilities, it's a payable. Then I see fixed deposit, it's 60,000. It's AB Bank. 60,000. And I don't write anything in the final column yet. Okay, so 60,000. I see loan for 40. Loan I'm not going to write in. I'm going to do this. And I'm going to wait. Okay. Consumable stores on hand is inventory. Accrued income is receivables. Accrued expense is payables. Income in advance is a payable. Prepaid is a receivable. Creditors for salaries is a payable. Can you see? How many marks is this already? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14. Hello? Who wants to tell me again how difficult is balance sheet? You know what's difficult? Getting the format into your head. That's the only difficult part. Now, does this question go on? I see it's only this. Does it go on to page 13? Yes. Okay. Oh, I have it here. So, page 13 says, part of the fixed deposit matures 30 June, 25,000. So that means I want to take it out of the fixed deposit because now it's becoming current. And I want to put it into my cash. You see? So I take it out of the fixed deposit. I put it into my cash. 108 will be paid back on the loan next year. So I know that's my short-term loan. So I know the amount they gave me for the loan here, I'm going to use that. It is the final, because here with loan, I always want to use the closing balance less the short-term loan. Now they don't give me any other information, so I can assume this is my closing balance. What is it? 82,000. And I see it's a mortgage loan, Finbank. Okay. And I see it's 82,000 less the short-term loan of 800. That's not possible. Did I read wrong? No, but that doesn't make sense. Oh, but I'm looking at exercise 2, that's why. So I've been using all the wrong things. No. Let's just go back. I'm sorry. Here we are. The loan. Loan, SA loans 440. So this is wrong. It's SA loans. And it's not a mortgage. And it's what? 440. So I'm going to say 440 less 800. And that gives me the loan. And now I can just close it off. Right. Yes. Okay, so I'm basically speeding through this. But this is just for you to refresh the format. Okay? So, let's see. My investment is now going to be what? 35. And 35 block and top gives me 982. Okay. My inventory is now 75,220. Is that right? Did I hear right? Okay. Receivables 221. Like 221,000.
Yeah, that's correct. Yeah, it's correct.
Oh, like that. Okay. Cash
62600.
block and top
159920.
And now I take this 2 and it gives me this total here, which is
1142100.
And now I know that goes here 1142100. Oh, and this pen doesn't want to write. Okay, I know that already. Then I know owner's equity is already given. They've printed it in the wrong place, so I'm just writing it in the right place. Current liabilities is how much? Something 200. Anybody?
339.
And remember to block and top, ne? It feels weird, but do it. Okay. Then current liabilities, payables.
71300.
And there's no bank overdraft. Block and top, it gives me
172100.
Okay, now I add these 3 things to give me that one. And there's my balance sheet. And that's just the format. Okay. So what is important, what I know you guys struggle with a lot of the times, is your accrued income, accrued expense. Oh, sorry. When you look at the videos, does it show you that time? Does it show that red? Okay, so if I write behind it, you will see it on the video. Okay, so accrued income and accrued expense. Ne? This one is a receivable, this one is a payable. Okay? And now, you know, I already got an income here, so now I need an expense. The future expense and the future income. So remember that, because that is where most of you go wrong. But the rest of the stuff is easy, and I'm going to ask you, this long weekend, you go and you go